Hello and welcome. Today's date comes in that of September the 25th, 2019. My name is Derek. This is the Money Charts channel. Like always, all bets, trades, and of the like within each his own risk and their own reward. These Fibonacci lines represents prices from the high we see here on September the 4th and the lows back here near the end of May. This is a 38.2% down correction, 23.6, 15%, and all the ones below that. In case you're wondering what the next Fibonacci level number happens to be, it would be in around $16.13. Below that, $15.39. And I'm going to now change the cross on here just because I want to use the drawing tool, so no longer the lines will be shown on this video. So if they're important to you, those numbers, well, then write them down, rewind the tape. Alrighty, let's go. One of the things in which I learned, mainly from Brian Shannon's from Alpha Trends, who pretty much does, or did, and still does what I do by putting videos out on YouTube of technical analysis, him doing stock markets, is always saying to adjust to the message of the market, because there was a lot of bullish behavior coming in here as the price managed to get above the 18 average of highs for the first time since making this move. And when you see something like this, well, it's one of two things. It's the start of reversal of trend, or it's a failed breakout. For me to see a failed breakness, I need to see failure at the 18 lows. Do I see failure there right now? The answer is no. Failing in current tense? Yes, but that's not over yet. The test isn't done. Because the question now lies to me, can this hold and stay above the 18 average of high, or lows rather? I mean, it can just chop around here and then go back in, and that would be, yes, it did. And for that to be the case, I need to see a significant move below the 18 lows. It's always going to establish a level of support, and that support has to hold. If that's the case, then it's holding and staying above it, and of course it would eventually get above it. But obviously, if it doesn't, you see weakness above the mounts this, or if it doesn't even go to this previous area and show weakness at the 18, if it just continues going lower, and you see it at the lower end here, at a little above 17 and a half, below 1760, even below 17 and 2/3, then that's a clear indication that we're probably going to break resistance and then go, of course, into that $16 area for the 61.8% Fibonacci level. But we still have to give it the benefit of the doubt that this can hold in this area. We had this level of resistance on the breakout coming back to support, because that's part of reversal of trend as well. As you leave your 18 in a down and or neutral situation, you establish your resistance, you come back to where you come from. Sometimes you don't come back too far, and sometimes you come back further, which might be one of those times. But in here, when you're using the 18 average, well, I can see the 18 average of highs has topped and starting to fade away at 1840. So that's the area that I need right now for this to get and hold above, for me to say, okay, this move here is back in play of this bullish situation. For now, the cautiousness for the failed breakout that happened yesterday is most certainly in place. So then, with that being stated, let's go back to the Fibonacci. If it's going to go down to 1613, what's that going to mean? Well, what I'll do in here is I'll put in a horizontal line at around that number. That's close enough. And take a look at this, say, on a different time frame, maybe the triple day. See, what would this tell me? Well, this would tell me that it's coming back to where it came from. And how many times on a bullish level have you ever seen that the market has a spot where it has its low, has its high, higher low, maybe it goes, and this is a spot like I was mentioning before, just recently, where it goes down a little further than it should. Well, this is an exact situation where it did, because here's a spot where it held and stayed above previous resistance. As this little bit here, sure, it went down there and even stayed down there completely for a couple turns, 3 turns in a row. I knew I'd say that. Turns, not periods. And that's because of a couple of videos I did before in playing a game. But so anyway, I might just keep saying that, just unique to me anyway. Because, again, this is a turn. Anyway. So yeah, it went down below, but it didn't break this support, and it eventually got back into this area. And then there's the resistance that established the big move there. And at some point, it's going to break down below this. We can see that this previous level of support is coinciding with the 18 in here, and it's just having its 18 correctionary test as it goes within this. As whenever you have a market that goes straight up, at some point you're in dire need of it. And the one thing I like about seeing these bigger, higher percentage moves is for all of this time. Now, this was just choppy, whatever action, and then down, and not much going on in here. Is now we're starting to see the situation of the statement where, okay, silver market, hey, I'm trying to break out. That's what I'm doing. I'm letting you know, basically. And in that type of market condition where markets are good and it's worth me doing videos and things are fun, I get more views, people care more, people trade more, that's more volume, all that type of stuff, then you're going to get these types of like 3% down moves in bull markets. As that can be oftentimes preludes to those big moves that come up. Because if you ever see the situations like we see in here, how you come to the 18, now what I'm looking for is the excitation of this within this particular time frame. As far as the monthly chart, or yeah, the monthly chart on here, we had I tracked this breakout in here because we had all of this decline waiting for this to flatten out. Didn't flatten out here. Didn't flatten out here because it couldn't even get to the 18 highs. It did flatten out here. Established resistance, came back to the band, and boy, did it ever. It had a failed breakdown. This is the big one right here. This little failed breakdown in here. And now it's got back to this level. So situation like this, failed breakdown, come back in here, break this resistance, the gains can be large. That's why I stated in yesterday's video, I wouldn't be surprised over the next several weeks, basically to the end of the year, start of next year, would be, I think, the regular timeline for the target I have of, I believe, mid to high $20 silver, late this year, early next year. But the market's obviously going to do what it's going to do always. I just like the probability odds based on the patterns that I see here. But as it goes, this is still just a reattempt again to just break out the trend. Okay, we got a flat band. You go above here. We got the 18 now newly starting to rise. Now, if we can see this consolidate, meaning correct through time, correct through price, meet up with the band one way or another, and by doing so, that means you'll see a few lines go by with the turns that they have, and then it's going to show maybe, oh, we had a couple, 3 periods that show strength in here. Then it breaks out, everyone sees it, and then you get phenomenally large moves because that's how markets work. When big levels of resistance or support get taken out, the level to the next key move is going to be usually very, very fast. And let's finish this off within the gold to silver ratio and a quick look at gold as well. This one will be much faster, but gold on the monthly chart, you can still say it's in this uptrend. It's still holding and staying above a rising 18 average of lows. Now, for it to stay rising, it has no choice but to basically get above 86, get to and stay above 86, 87 for the next into the next few months, and also start to rise above 90. As I mean, uptrends are so you need to just keep going up for them to stay, of course. On the weekly time frame for it, we can see that every time it dipped a little bit below here, like this was holding and staying above. This dipped below, but it stayed above. This dipped below, but then we resisted it with a good leg lower. So we've had one new leg lower on this. They can call this a bear market breaking down below the support. And now is it going to have another leg lower? Well, we've came down, established a level of support at 79 and a third, have now come up to this 18 highs and a level of key Fibonacci, which didn't support on its way down. It's supported on a mega pierce above in here, if you want to call that a pierce above. And if it is, it's really close to being that. If it is, again, it's just it's a big one. But regardless of the fact, it's now resisting this level. It had just leaving this move a little bit here. Now it's came up with today's action, of course, because silver went down big, and so did gold, but not as and anywhere near as big. You can see a type of bullish situation if it can get above this level of resistance, but oh my goodness, does it have to do so? And if it does, then this can be something to trigger a reversal in trend because you have obviously this major low. Now you're in consolidation phase. This time in consolidation phase, when it got above the 18 average of highs, it never even attempted to get back above it again when it re-entered the correctionary mode. Here it gets above the makes its established resistance. So comparing it to like this, it's now been spending some time more volatile, having a failed breakdown below the 18 average of lows. It still has to break out above the 18 highs again. If it does that, that would show that after its move and correction, that was able to get going again, something it wasn't able to do back in the second, third week of August. With the 18 average of lows and the price action in here, we can see because this established support at 81 and 5 ninths was in this. If you see weakness at the lows within that area starting to break down, not only would I expect a fast move to 79, but I'd also expect a very low probability for great support. Great support I would define as not only would it go stop going down at this area, but also go up good too. Thus, where you would buy low, sell high kind of deal. Like it could support by maybe going here and then just grinding and consolidating at it, or it could go down here and have a weak ass gain that's really not worth selling here kind of deal. And then, of course, eventually after that, make a significant leg lower. Okay, looking at gold next. Actually, no, I want to take a look at the shorter term time frames because of what happened today. So throw that aside. Interesting gap in here. And my 18 averages, now they're loading. Really, I don't understand this gap in here, but anyway. Um, so there we have a situation where from this low it has its move. And when you're in a bear market, what's so important is to establish a higher low. There it goes. So now the next step is to make a higher high or at least a good move, and then as hard as the next one would be another higher low, meaning maybe a top say here or a little bit higher, but then it comes back down to where it came from at 82.4. So it has to not make this lower low, because if it does again, I'd be seeing a lot of reason why if it breaks down below in here that this thing is going to keep going down. Now, with this being a key Fibonacci point breaking above this line again, you probably have a significant nice move higher. Finishing off within gold, we can see after getting resisting this large long-term Fibonacci level, it gets above it and stays above it for a while, and then the big move over the 2-hour session here, going from about 1530 down to about 1504. And it's just really stayed there. Still hasn't had a good enough move through enough time or price to get up to the 18, but it's getting close enough where it will very eventually, relatively soon. We take a look at this on the daily term time frame. It has really got this sideways consolidation, and you can say it started from August the 7th. Major support has been established at 1487. Major resistance now between 1557. Now the keyword is between. Before it was just major resistance at 1555 or whatever. Now it's between that and 1535 based on this resistance, which coincides with this high in here as well. The move was a play to get above the 18 average, albeit just barely. Still within what's been going on in here. Holding this 18 lows, really within this area of previous support, is very important. I got that level at about 1498. As far as the weekly chart for gold, coming back down to the 18 average of highs, no real break above it, but still maintaining itself in. If this thing fails, this is going up at such a rapid rate that at some point it's in need of a correctionary phase where the 18 average at least has to flatten out, or it has to fill some of its empty space below it. That doesn't mean it has to happen now, because if you start seeing this after, especially after coming back to this 18 via price, not large price, but a little bit and a little bit of time, and you start to see it moving up in this area, oh, we're going up to 1539, 1540. Well, then that's telling me that we're going to probably go up. And of course, next key level is 1670. Also, I'm expecting it to pierce above that. Within the monthly term time frame, the month is almost over. Today's Wednesday, so there's only 2 more days left in it. Just like a month of July, this is more of a pause month. I don't know about more aggressive, but just as aggressive as it was before. But another pause month after it did the same thing before, because back in June it had a huge month breaking above a key level of resistance, and then it paused it, and it got to this time the really a 50% retracement between the low and a high. So after just pausing in that area, had a quick move to key fib, And again, it's just pausing it there. So this is giving a lot of strong indication. If there's going to be a pullback, and that is just a big word, is a key if, the obvious spot is, of course, where it came from and this Fibonacci line at 1320. Thank you for tuning in. Have yourself a great day. Bye-bye.